Hello and welcome. Thank you for joining us for this discussion about Pierce County and Tacoma's real estate market. I'm Debbie Cockrell, Business and Development Reporter for the News Tribune in Tacoma. During the pandemic, Pierce County saw home prices continue their climb as work from home options expanded and more people moved to the area, and Seattleites continued to seek real estate bargains outside of King County. While prices are now coming down, interest rates have gone in the opposite direction after pandemic era lows. Listings, pending sales, and closed sales are all down from last year's numbers. We know this can be frustrating, so we've asked two real estate professionals to share what they've been experiencing as the market has shifted. Realtor John By is the team leader at John By and Associates in Kent. The office serves the greater Puget Sound region, including all of King, Pierce, Snohomish, and neighboring counties. Born and raised in the Puget Sound area, By has extensive market and community knowledge. Joining John today is mortgage consultant Janeth Pannon, and she is with Penrith Home Loans in University Place. She has over 10 years of experience and has gained a deep understanding of the intricacies of mortgage lending. She is fluent in Spanish and an active member of the National Association of Hispanic Real Estate Professionals. Thank you both for joining us. Let's get right to it. So this first question is for both of you, and we'll start with John. As the market has shifted in recent months, what are each of you seeing in your fields? Really, what exactly is going on?
So there's a lot that's going on. And I think too, the big difference is it depends on where you live. Like even, as we're talking today about Tacoma and surrounding areas in Pierce County, there are certain pockets that are going to be performing differently than other pockets. So the biggest challenge that we've seen over the last really number of years is the lack of inventory that's available. That's really what is fueling the challenges that we are seeing today. During the pandemic, I think everybody thought once we returned back to normal that we would have a lot more options, things would be easier, there wouldn't be as many challenges. But as Janeth jumps in a little bit, talking more about on the mortgage side of things, right now it just comes down to options. If there's not a lot of options, people are going to be staying put. So until that changes, which more than likely it probably won't, we're going to see a similar type market that we're in right now. Nice homes in nice areas priced well are going to sell fast. And that's just something that you need to make sure that you have professionals that are surrounding you that can help you seek good counsel and make sure the decisions that you're making are appropriate for what you're looking to accomplish in today's market, whether that's buying, selling, or not doing either one of those. So it's kind of a little bit about what's going on behind the scenes.
Janeth, what are you seeing?
So, things have shifted greatly. Early last year, we were starting to see sellers provide credits for buyers, right, for temporary rate buy downs, closing costs. Whereas now we're starting to see buyers be more competitive with their offers, right, paying for their own closing costs, forgoing the buy downs, even bidding over asking price. So that tells us that inventory is still tight and demand is high. So buyers are still very motivated.
Yeah. For John, are multiple offers still happening, or is that a thing of the past? And add to that, what's the average number of days that you're seeing on the market right now compared to last year?
Yeah. So it boils down to the answer to that is yes and no. But I would say that a number of years ago, or 18 months ago, really, everything that you put up for sale sold. It was just a guess about how many offers are we going to get and how fast is it going to sell. Now, right now, we're seeing some houses where they are receiving multiple offers, just not as many. So there was times where we'd have 10, 15, 20, 30 offers on a property. That's not really happening anymore. Now, we can see sometimes, though, one or two, but you might not see them as aggressive as they were before. So before, there'd be no financing contingency, waiving inspection, pretty much as is. Here's my deposit, I'm all in. That piece has changed. So even though we might see some multiple offers on certain properties, it's not 100% that they're going to be waiving their inspection contingency. Some cases will be on our sellers be providing a pre-inspection piece to try to help buyers work through that and navigate that up front, to try to work through some of those negotiations that you could have down the road. But we are seeing them. So the answer is yes, just not in the same frequency. And I would say before it was 90% of properties that were getting multiple offers. And I would say now it's probably closer to 10% that's receiving multiple offers. And I did some looking around and I found some stats from the MLS here that came out there for June. But if I look at average days on market in June of 2022, so we're talking a year ago, average days on market were 34 days. And right now, 2023, average days on market is 57. So, we're pushing, a 2-week range more time on market, because even though that there's less supply, the demand is also decreased as well. So it's extending the amount of times homes are on the market. And also to some of our clients and some sellers, there might not be a lot of great comparables when you're pricing. So we are seeing some prices that are a little bit higher than they should be, which takes a little bit to get that down into a range where buyers are comfortable writing up an offer.
Yeah. Janeth, what are some of the main issues you see people seeking loans running into at this point, and any advice?
Yeah, absolutely. So one of the things I come across often is, with the pandemic, all of our finances took a hit. And so there are a lot of buyers who are ready to purchase, but maybe there's a couple things on their credit that aren't the best, right? We may have gotten behind on some payments and things as such. So I think it's really important to start monitoring that, to see maybe what you can do to position you to where you're going to be able to get the best mortgage terms possible.
Thanks. John, and let's put up the graphic of where people are relocating from at this point, if we can. And this would be a question for John. Who is selling or buying at this point, given that it seems there is a definite slowdown?
Yeah, so there's a lot of folks out there right now that are strapped into their house. If you were able to get reasonable price either within the last 5 years and a historically low mortgage rate, which is making it really tough to step into that next stage, right? Even though you might really, really want to, the challenge is, is it worth, paying a little bit more money? Is it worth, getting that extra bedroom, or can we, kind of hunker down and make it happen? So a lot of the clients that we're working with right now are folks that have to sell, not the ones that want to sell and buy. So these are folks that have had life events, life changes. So that's death, divorce, relocation. Everybody needs a roof over their head. And so when there's challenges that happen inside a family or situations that change, then you get forced into an event of buying or selling. So that's a lot of what we're seeing right now, is people that have to go through this process, not necessarily want to. It's when everybody around's not talking about this is really fun or exciting, or they feel like there's more risk around it, more folks are going to roll with what everybody else is doing around them. So what we found during the pandemic was everybody started buying, because that's just what everybody was doing. So everybody wanted to jump on that bandwagon. And now you're hearing that, oh, maybe you shouldn't do that. But now, and I bet Janeth can experience this a little bit as well, is that the more that we see people in our circle that are making the move and it's working out really well, more people will jump into it. So as we look at especially a higher interest rate environment, once you have some people that that have gone through that and said, hey, it's not that big of a deal, right? It's not really exciting to be paying where we're at, but we can, and we budgeted according to that. And we know that there will be an opportunity down the road to where we'll be able to, refinance and then get our financials back in order. But the main people that are doing this right now is because they have to. And that's why, you see less homes for sale and keeping inventory low. And you have a little less on the buyer side. But if you look at pricing in the graph that you had there earlier, there's absolutely been some changing in pricing, but you can see that it's rebounding. If you look at stats in our entire MLS, so the blanket coverage is really all the Pacific Northwest up here, and every single month since the beginning of the year, our median price has increased every single month. So I think people are always waiting for this magic, like, bottom of the market. Well, unfortunately, that's probably already passed. So if you're trying to get like that cheaper price, like what Janet alluded to earlier, that a little bit earlier in the year, sellers were more flexible. Sellers really wanted to try to get that property sold and were paying more credits and getting more aggressive on trying to get their properties sold. But it's not happening as much right now. People are practicing patience, which I think is really good too. So it takes out a lot of the violent swings in our pricing. To have average days on market, even at 34 is, a month or closer to 2 months, we're still in a seller's market when it comes to average days on market. So you just have to be patient. So that's a little bit of changes and why people are moving right now. Unfortunately, it's not for the fun stuff. It's because you got to do it.
I guess, and this is kind of just a question that I'm thought of just now. That time on market, how does that compare nationally? Do you happen to know offhand?
I don't know nationally, but my gut would tell me is that we're probably pretty good.
Yeah.
If you stay on the coastals, if you go down to California, it's definitely probably a lot faster days on market, so a lot less time on market in certain areas. But I think that we're pretty darn insulated here, so we don't get as much of the brunt. And people are always wanting to move here. We're going to get into where people are, and we talked a little bit about that now. But that was people moving in here. So we do have some people that are exiting, but we're always having a constant flow of more people that are looking to move to our area.
I see. For Janet, do you think we'll ever see 2 to 3% rates again on 30-year loans? And this is the $1 million question. When do you think rates will start dropping significantly, or will they?
Well, if you're looking at forecasts, they're kind of all over, right? Third quarter, late fall, early winter. So the reality is nobody really knows when that's going to happen. But what we do know is that it is going to start coming back. But I think it's also important to recognize that the 2 to 3% rates that we all got used to, that was the anomaly, right? That was our all-time lows. And if you've been around long enough and you were purchasing homes back in the 80s when rates were 18%, and you look at the rates now, they're really not as high, right? So on average, it's 7 to 8% has been the rate. And currently, we're thinking that when rates do start to come back a little bit, they're going to be more around the 5 to 6% range.
I see. And just going back a little bit, and this is actually for both of you, just kind of your own opinion, with prices coming down and interest rates going up, the way this mathematically works out, are houses any more or less affordable than they were during the peak of the frenzy? And I'll start with Janet.
Okay, great. Well, the reality is that the higher the interest rate, the higher the mortgage payment, right? It's just the way it works. But when you look at what was happening 2 years ago and how for a lot of the homes, as John mentioned earlier, there was multiple offers. Homes were going for $50,000, $100,000 over asking price. And a lot of the times that difference that they were offering, was made up in cash. So when you look at what the payment was then, but then you take into account how much more you paid for the home, how much of that you brought in from your reserves, and then you look at prices now and the fact that you can refinance down the road once rates come down, it's still a good time to buy, right? If you're in the position to do it, it's still a really good time.
Yeah. So when I think about, just from a positioning standpoint and, does it make sense? We're off from the high for sure, but we're starting to claw back. So when you think about affordability, I look at an exercise of try without getting in trouble. So what that means is call Janet, figure out what your payment would be on this house that you would like to buy. And then figure out, number one, if you can get approved for it. And then number two, act like you're making the payment now. I think the biggest thing for all of us, it's fear, right? We all got to live somewhere. But when I think about it is, yes, rates are higher. They'll come down at some point. but the prices are a little down from where they were previously as well. So your strike price is always something that you lock in. The rate is something that you can always change. So I feel like right now pricing, prices are off the all-time high, so you can get a better strike price. But also if you're renting right now, it's probably outrageous how much you're currently spending. So when you think about that pairing, if you're renting and what the price is at, it might not be that big of a difference. But number two is it's also rent control. Like it's also pricing control. When you think about your budgeting month over month, when you're renting somewhere, you know that that's going to go up. Yes, your house payment's going to go up a little bit, but just from your property taxes and your insurance are going to change every year. So you have to factor that in a little bit. But I don't have to factor in that, one, my landlord might sell this property and I'm going to have to move, right? And if you have kiddos, like how do you change schools? Are you going to be able to find another place? Like, so you have to look at, are we able to adapt and adjust around that? And then also too, like my rent's probably going to go up considerably. You know, when you talk about rent increases year over year, you know, there's significant, especially if you have a strategic landlord that is going to really try to push that envelope. Then you could have had a $2,000 rent a couple of years ago, and now it might be $2,800. You know, just because maybe the rent was a little bit low and they got some of that money back and now they've been pushing it up. So when you talk about how much you're actually spending every month is a huge deal. And when I first got into the industry 2 decades ago, I look at why did I buy my first house? And I look at it as I wanted to start something. You know, I wanted to be able to hang my hat on something that I personally own. And I looked at modest returns. I was looking at 3% a year. I was looking at, okay, I have the opportunity to right now you can still deduct a really good chunk of your interest that you pay on there. So a lot of the times that ends up kind of paying for one of your mortgages after you look at your tax deduction, talk to your accountant, right? But I try to look at other ways on why it made sense to do it. And really just some basics were big pieces of it. So, you know, I think personally, if you can do it, you should always do it, but it's got to be for you. It's got to be for the right reasons. You want to be excited to be able to make it happen.
Yeah, and this next question for both of you, and speaking about renting, if you are renting and can't afford the current market, what can you do to position yourself for when things calm down? I know we've touched a little bit about this, but maybe we could drill down a little bit. And I'll start with Janet.
I think looking at the overall picture, right? John mentioned earlier, talking to all of the professionals, talk to your mortgage consultant, your wealth manager, you know, whomever you have in your corner, reach out to them and find out what your overall finance picture looks like. Overall, I think that working, like I mentioned a little earlier, on your credit is going to be great. The better the credit, the better the mortgage terms you can get. Working on your savings. A lot of times I have buyers who give me their proposed mortgage payment, what they think they're comfortable with. And it differs a little bit from what their current rent looks like. And I think it's important that when you start to think about those numbers, you start saving in advance, right? If your mortgage payment is $2,000 and you think you can go to $2,500, start putting that $500 away. Make sure that that's something that you're truly going to be comfortable with in the long run.
Yeah, if we could get the rent comparisons on the screen just so you can see how this is, it's super expensive no matter where. And Tacoma may be a little bit of a bargain compared to elsewhere, but I mean, I can't even imagine in Bellevue right now what these people are going through. It's quite a market. All right, now I'd like to start getting into some of the reader questions that we've received. Peter in Bellingham asks, what's the current market for condominiums, and are areas more attractive for this segment than others? And John, I'll let you take that.
Yeah, so the condo market's very unique, especially when you kind of have outside pressures. So, you know, when people are on the quest for affordability, there's a couple things that happen when you look at condos. Either one, it's going to be depending on where you're at, you might have the opportunity to get into a condo because of the price point that you're approved for. So you're going to have more like affordable options in certain areas to be able to get into those. Now, so the challenge is that when you're buying a condo, is that for qualifying for a condo, you have to qualify for your HOA fees inside for your approval. So you can buy a more expensive house than you can with a condo because of the way that they calculate the loan. So you have a lot of folks that are trying to maximize their budget and get into something. Sometimes the condos are going to go, they're not going to be as favored as much. So when you have a fast and furious market like we've had before, when rates were really low and prices were continuing to go up, it was across the board. It was in all different areas. And, you talk about in multifamily, also in condos and just regular single family residences, everything's just taken off. So when I think about condos versus houses, when the market gets challenging, and I'm talking condos versus like a single family home, like in the neighborhood, you have more folks that are always going to be geared and gravitating towards the house, because if they're going to have to pay more money, they're going to try to potentially skip a step. So sometimes that condos can be a building block in your home ownership journey to start there and then end up in a single family house. So what it will do is it really just continues to put pressure on condos. So the challenge is that as inventory increases, the days on market, if we're able to break down the stat between just condos and just houses, single family, you're going to see that on the condo side, your days on market are going to be longer than the single family houses. So when you're doing that, if you're currently thinking about selling, really identifying and looking at your price per square foot of your unit compared to what's going on in your building, very important, because that's going to give you a ton of data on really what's happening. Also, if you have any special assessments, this is where a lot of folks get scared and challenging when you come into condos, is that there's a lot of things that are out of your control. So if there's a big looming special assessment, or if there's a rental cap that's met, or if it's not financeable for certain types of loans, these are all just barriers of entry that get put onto condos, which again kind of funnel people over into the single family area just because of the path of least resistance. And they just want to be able to maybe just get right into a house instead of doing that building block for condos. So that doesn't mean that there's no market for condos. Let's be clear there. So you just have to be priced right, have the place looking right, and you got to be patient. Right now, I think that we've had years of just expectations have been unreasonable, right? What was happening, selling your house in a couple of days with a bunch of offers, is just not reasonable. It's not a healthy market to be in. It's like, great if you're selling and you're leaving and you never have to do anything. But the challenge there is that there's so much going on that once you got your house sold and you got this great price, well, now what do I go buy? So a lot of the same challenges are presenting themselves now than when they were previously, but they're just packaged up a little bit differently. So my biggest thing is, if you're looking to sell a condo, it's totally okay, but you really just want to be prepped behind the scenes and make sure that you're able to present it to the marketplace in a way that's going to help you get the property sold.
Yeah, for people looking for condos, and excuse me if I missed this, how's the inventory right now for that?
You have more condo options than housing options.
We do.
Yeah.
All right. Mark in Tacoma, and we'll start with John and move to Janice, because I think she can add some insight to this as well. Mark in Tacoma asks, how do you price correctly in this volatile market?
Yeah, it is a great question, because the comparables that you have, when you go back even to a sold property that was a couple months ago, the market is shifting and it's actually improving a little bit. So you have to really look at, okay, where was it listed at initially? How long was it on the market? Was there any adjustments in price? And really get the tail of the tape on what was going on with the comparables that you're looking at to help make the right pinpoint on where you want to price. So pricing is fluid, though. Pricing is emotional. Pricing is a conversation piece. And I think that's where a lot of the struggle comes when you're setting proper expectations, is, okay, if we price it here, this is what we can expect, right? If you price it high, it's going to take some more time. It might not necessarily be out of the question, but does this strategy align with your goals? So when it comes to price, it's really, you have to know what's going on. But the challenge is right now is that because we have had many less sales than we have had in the last previous couple of years. There's not a lot of comps to go off of. So you and your realtor partner need to go through and figure out, okay, this is what's going on. This is where we think the zone is. Like, where do we want to be? And then what is our strategy in the event that maybe nothing comes in? Like, how do we readdress that and make sure that we can get you to the point where you're going to get a fair price and you'll be able to get it sold in a reasonable amount of time? And the only way that happens is through a lot of communication. You got to know what the agents and the buyers are saying when they're coming to look at the property. You got to have a great open relationship with your professional partners to make sure that you can figure out, open book, what is that next step for us and what makes the most sense. It's going to be hard. Like, if you have to make any adjustments on your price, because we all think that our houses are amazing, right? Even us as realtors, I feel like sometimes we're the worst when we're pricing our own houses, because we just, we think we can get the highest value ever, but that's not necessarily the case. The price is what a buyer's ready and willing to pay for it today. Like, that is the price. There's no institution behind that's going to pay a fair market price. It's not going to happen. So you have to be patient and wait for that right buyer to come in. But pricing is very tricky, especially if you're in a location to where there has not been any comparable sales in the last 6 months or so. Makes it tough.
Janet, there is one angle to that I'd like for you to address, and that is it harder to get comps these days on properties? Have you noticed any kind of difficulties with that?
It really just depends on the property type and also the location that you're looking at. If you're looking for more rural areas, it can be. But for the most part, I haven't seen a lot of issues with that. When we have appraisals come back and show us their comps, even when the pricing might not agree exactly with the value, oftentimes at that point, the realtor can come back to us and say, hey, can we ask them to take a look at this versus that? And I've seen a lot of positive changes come from that.
We just got a question in. How long do you wait before adjusting your price? John, you want to tackle that?
Yeah. So I feel like, you got to give it a little bit of time. And I think it's not necessarily like the days on market. It's more, what's the activity that you're getting? How many people are coming into the property and what are they saying? And is it something that you can control or not? When I think about, certain properties that we've sold over the years and ones that we have for sale right now, the ones that have been on a little bit longer than the others are just either properties that are super unique. And before, everything was selling, unique or not, everything was selling. Right now, if you have something that's a little unique, it's going to take more time. So it necessarily doesn't mean that if you adjust price that it's automatically going to sell. So that's where you got to be cautious, is if you were going to adjust the price, make sure you're doing it for the right reasons. Because if you make the adjustment and you don't see any activity from that can happen. It doesn't mean that automatically everybody's going to be knocking at your door requesting for tours right out of the gate. It might move the needle a little bit, or it could move it a lot depending on what your strategy is. But I would say that sometimes, if you're on a short time window and you've got to make a move, then you have to push the envelope and you have to get more aggressive on your pricing and your strategy. But if you're like, hey, I got an interesting property, it's super unique. Even when we bought it, it was on the market for a long time before we got here. So have to know what your buyer pool looks like. And then you have to wait for them to show up, is the biggest thing. So I know that's not an exact date. If that was what you're looking for, it's like day 26 or day 43. It just kind of depends on where you're at and what your goals are. So
I'm just wondering, when is like the discomfort level that hits you when after a time and you go, hey, you might want to start looking at this because,
Well, it's tough too. If you got a double mortgage payments and you've moved already, you think about, why you're doing it, what position you're in financially. Is it worth the wait, or do you got to close the circle? And at some point in time, that crossroads always comes to a head if you're on for a little while. But then you just have to make a decision. What do you want to do? Because if you're getting, activity every single week, multiple showings, and you're just not getting people to write, if you've had 10 to 20 showings and no offers, it's probably a pricing issue.
Oh, that's another question that I have. Has there been a lot of sellers having to, like rent apartments and stuff in the meantime, kind of like in that transition, or is that a good strategy? Or
Yeah. Well, moving twice is never fun, but for the right reasons, it can make a lot of sense. So, yes, we do have folks that will have sell, you sell, move into like a short term living scenario until you're either able to close on your purchase or you haven't found the right place. Especially if there's not a massive amounts of options out there. And we are doing more contingent offers now than we have seen in a very long time. So that's when you you write an offer on a house that you want to buy that's contingent upon your house closing. So we are seeing more of that activity, which is helping. But the challenge is with that, though, is it doesn't help anybody else that doesn't already own, because now you're just swapping. So it's not like we're gaining any ground on inventory, or more first-time buyers are able to get into properties, because if people are going that direction, there's just, you're just kind of trading back and forth. Now, that happens all the time. People trade, their houses consistently. So that's always going to be something that's there, but in a low inventory market, it just continues to put more pressure on it. So I'm a big fan of having a backup plan for the double move if you have to, mainly so you don't force yourself into buying something that you don't really want.
I see. Janet, I'm going to give you this one. This is from Joan in Pierce County. Will 2024 be a good time to sell or buy in Pierce County?
Absolutely. I definitely think that it is. We are seeing more moderate prices than we did in 2020, 2021. And again, with hopefully lower interest rates, I think it's going to be really beneficial for a lot of people. And when you think about the appreciation that's to come, that's another plus. So, yes, I think that ultimately the best time to purchase or sell, as it's been mentioned, is when it's right for the individual person. But as a whole, it's going to be a great time.
Cool. Patrick in Tacoma is asking, what are the most significant reasons for low housing inventory? I think we've touched on this a little bit, but maybe John, you can enumerate them again.
Yeah, it's rates. I think rate and price is just available. It's availability. It's there when you're in a down inventory market. It's just people are trapped in their house, and there's not enough of it. I think that's the biggest piece here too. Is that back in 2000, early 2000s, you saw a lot of condo development. Now you don't see that anymore. Especially like down in Tacoma, I've sold a lot of condos in downtown Tacoma. But if you notice now, the majority of that skyline are not condos for sale. Those are apartments for rent. So, and you looked at the scale earlier too, and it showed the average on the price, where it said the rent price on that stat. Those were the average prices for apartments. Those are not the average prices for houses. So I would say that if you look at those, you could probably have to increase those by at least 50% when you think about how much you're going to be able to rent a house for. So it is expensive to rent. It's expensive to own. Living in our area, you have the 10 best weeks of the country here in the summertime, and then you're going to pay for that. So people want to be here. Our job market is good. So the more people that we have that continue to come here, the harder and harder it's going to get. And we definitely have people leaving, but not enough. We do not have enough even in the pipeline to get anywhere close to catch up with the demand for our area. So that's just going to continue to push up pricing. And you're going to also, you might have to look at just changing your goals a little bit, when it comes to, hey, we have X and we'd really like, 4 bedrooms, but we could get away with 3 or 1.5 baths versus 3 baths. Like, you might have to bring down some of your expectations to get into a zone that works for your price point. But that's not forever, right? I think that ultimately it's being in a location that you enjoy, that you want to be in for yourself, for your family, for your fun, all those things. So unfortunately, it's always going to be, I don't think there's ever going to be a plethora of inventory, whether that's for rent or for purchase, outside of the condo or outside of the apartment realm. But even that's tight too. So, but if you need a place to rent and you have to find a place, that's probably going to be your best bet right now.
John, staying with that, are you still seeing a lot of full cash offers at this point? Or I mean, there was always the talk of, oh, the California buyers are coming in and paying cash for everything and it's ruining
Yep.
it. Is this still happening?
It is, but not like it was before. So we have definitely run across it and been involved in a number of cash purchases this year. But before it was the cash purchase over list, like we're just going to smoke everybody and get this property. Now what we're starting to see is like the cash buyers of old, which are I'm coming in and I'm going to be really aggressive on price, and now I'm trying to find a deal. So the cash offers that we have are not. You know, are not those usually the best offers to take anymore. It's nice not to have any contingencies around the financing piece of it, but there's just not as much. Also, too, because the stock market is doing great this year, you can get a lot more money on your money just sitting in the bank than you have in a long time. So I think some of those folks are just looking at, if I am going to go out and buy something cash, I need to get a better deal. And so the answer is yes, but not nearly as much. I would say that we're seeing that probably in about 5% of the offers that we look at. So, and that's pretty significant compared to, I would say that we'd see some stuff, over the last couple of years, it was over 50% of the amount of offers were, even if it wasn't a cash offer from the buyer, they had some ability to come up with the cash to be able to close.
Wow. Yeah. So, Dana in Boise is asking, is it a buyer's or seller's market at this point? And if neither, what would become the tipping point? And I'd kind of like both of you to take a run at that. Jana, if you can add your thoughts, and then we'll go to John.
I think based off of what we're seeing right now with still competitive offers in the inventory, definitely leaning towards still a seller's market. Even though home prices we are seeing start to become a little bit more moderate, until we get more inventory out there, I think it's going to be a seller's market. But I think that John might have the better insight on that one.
It's definitely, we're still leaning towards the seller side. Once we start trending like days on market, 3, 4, 5 months, at that point in time, you would for sure be tipping over into a buyer's market, as you're going to have much more upside as a buyer, because that just means that it's taking longer for people to sell their houses, and also is going to really start impacting pricing. If you see houses that have been on the market for 4, 5, 6 months, they're probably more willing to look at offers than the one that's been on for 6 days. So as more properties over the whole of the market continue to get more days on market, that is going to lead towards more opportunities for buyers to get in there. So, as we're talking and going through our consultations with our buyers up front, it's like, okay, what is your level of comfort, going in right away, especially if you go into a house, you still see it now, it's 3 days on market and there's 30 business cards that are in there. There's probably a good shot that one's going to have a lot of activity on it. So are you willing to do that? Are you comfortable with what it's going to take? Or do you need to pull back? And at that point, just wait a little while for that right deal. And again, this is where the unique property comes into play. When the stuff that before everything was selling, now there just could be something a little off. Could be, the location could be off a little bit. The way it lays on the lot could be a little off. The neighboring house might not be as nice. There's all these small little things that everybody was willing to overlook before, but are now not. People are not. So those type of houses, as you're going out and shopping and looking to purchase, are ones that you might have a little bit more success on with getting a little bit better value, which in turn will help out, with your payments overall every single month. And when the market does heat up again, if you are looking to sell, depending on what's going on at the time, it could be a little bit easier for you at that point. Or again, what your goals are. Right now, it's if you're looking to buy and sell, I would counsel a current client, have you thought about, I know you really want to move, but, your payments X and your rent would be this, right? So what's the difference? So if you have an extra $1,000 a month coming off your rental income and you push that over into a payment right now would that be able to qualify for, or comfortability feel good about upgrading to a new home? And that's why having somebody like Janet and a real estate professional like myself to be able to look at, okay, like here's what you could sell it for, here's what you'd make. Hypothetically, if you were to push that over and get a mortgage right now, what does that look like? Then you can look at the whole picture and make an educated decision. But I think having great data to make good decisions is important in any market. But right now, I think that there's some opportunity out there that people are just not looking into. So
here's a new question. How is all this impacting first-time buyers, and what programs are out there to support them? And I'll give that to Janet.
Well, again, with the higher interest rates, it makes a difference on the mortgage payment. So yeah, a lot of people are in a position where even if they'd like to buy, sometimes that payment is just a little bit high for comfort. So there are programs out there, including Washington State Housing Finance Commission has a down payment assistance program. It's a really good option for people who might not have the initial funds to get into a home. So always something to look into. There are also just lower down payment option mortgages, such as like FHA loans. Conventional loan has one as well for first-time buyers. So there's definitely a lot of options. Talk to your mortgage consultant. Let us know kind of what your goals are, what your finances are, and we can help you put together a plan to get you into a home.
I've got another question for Janet. How are appraisals going in this market? Are they coming okay, or there's some just like, woo, this is not working out for this loan?
Well, I think that agents, realtors have done a really good job of pricing homes. And because of that, right now, we have not really seen a big difference in appraised value versus listed value. I think that that's something that everybody is kind of coming to terms with, is where the market is, and that it's not 2020, 2021, right? You can't really expect to sell your home for the same value that your neighbor might have at the time. So I think they've done a really good job, and it's really shown with the appraisals.
Wow. Yeah, I remember back 2015 or so, it was always a nail biter because we were just coming out of kind of the slump and then going back, and people were starting to raise their prices. It was just, oh, wow, are we going to get our loan or what? But John, are you seeing many people waiving inspections at this point, or is that a thing of the past?
There's a couple of things that are going on. Is one, depending on the property and what's going on, we're still seeing a lot of pre-inspections on properties. So depending on the circumstances and what the overall goals are of the client, there's a lot of the times that we'll do an inspection before we actually list the property that you provide to the buyer. So at that point, they can make a decision and try to, for the seller, it's beneficial to try to be able to get through that contingency, so that they're okay and there's not going to be any red flags, and they're going to be willing to move forward. So when there's a pre-inspection that's in place, there is about a 50 to 75% that they'll either waive the inspection or they'll try to negotiate with the findings just right up front, which is nice because as a seller, you just don't know. Like you're excited to get your an offer on your house and come to terms, but then you're just super nervous because you don't know what's going to happen after that. And in an inspection contingency, it's really a get out of jail free card. So you can just the buyer can just change their mind for any reason. So it really leaves the seller vulnerable. In our state, and the majority of states, a lot of the contract law and offers is really going to favor the buyers. So we just have to know and again be able to counsel through that piece. So if you have a pre-inspection up front, there's probably a pretty good likelihood that you'll be able to get through that inspection process a bit easier. Now, not everybody's going to want to do that. One, it costs money. Two, there is, maybe there's stuff that you just don't know and you would rather not know. So there's sometimes that just doesn't, you feel like that wouldn't be beneficial to do that piece and let the buyer, take on that piece of the puzzle and get their own inspection moving forward. So the answer is a little bit. We see a little bit of waived inspections, but not a ton. If you got a really good area though, and you're priced really well, and you get one of those opportunities that you have multiple offers, we are still seeing some inspections waived at that point. But again, we're talking 10% of properties that we're seeing right now are kind of having that type of an outcome when they go on market.
Are home warranties worth it at this point?
Home warranties are so tricky. It depends. I've seen times that they are absolute home runs, to where it has been an amazing benefit for the client. You know, it just depends on the house you're buying. I think that whether or not, though, if it's new or old, the one thing that we have found is that when you change the way that the house is lived in, that is when you're going to have the most opportunity for things to break. So if you have a house that was experiencing very little wear and tear, say with 2 people living in the house, and then they sell, and now there's 6 people living in the house, this just takes all of your systems constrained to a level that they're not used to. So even when they're not that old, you can see challenges with plumbing issues and with your furnace. You know, it's like if somebody keeps it at 68 all the time, and then in the winter time, you know, somebody else moves in and they got it at 75. Well, that system is working completely differently. So the home warranty is nice because you're covered for a certain amount of time to be able to get some of those appliances either repaired at no cost or little cost. So it can never hurt, but if you rely on it, you know, there might be certain things that you thought would be covered that aren't covered either. So you really just, if you're going to utilize a home warranty, make sure you're very clear on what's getting covered and what the process looks like. And in most times you got to practice some patience, because they're not really excited. It's kind of like, it's just like insurance. So you have to, you might need to make a couple extra phone calls. It's probably not going to be as white glove as we would like to have, but that's just the way it goes.
Yeah. Janet, anything to add to that? You had any
Absolutely.
Yeah.
Yeah, I agree with you. We purchased a new build home, and we are, like John said, finding that there's certain things that just aren't covered, and there's certain things that we've come up with the warranty that, you know, we would have thought we wouldn't need done now, right? It's a brand new home, so I think there's definitely value to it, but definitely need to know what it covers and have those expectations.
Yeah. Yeah. I've always wondered about that, because when you're going through the checklist and they go, well, you know, you could do a home warranty, you know, it's like, is that worth it or what? I just don't know. So, you know, so many questions. It's overwhelming, you know, when you get into this, you know. So one more question. We're about coming down to the close of our hour, but for John, how have out-of-state buyers affected this market? Are they still doing it at this point? I know we've touched on this a little bit, but can you drill down, and like, which states are you seeing really having kind of an impact in terms of buying?
Yeah, so I see a lot of like right now, if we look at where are people coming and going, and I think a lot of the people, the 2 big areas that we have people coming from, at least that we're noticing here a lot on our team, is Texas and California, and I think that's really, a lot of that is tech-based work is still here, so that's where we see a lot of people coming in from. I've seen a lot of people too over the last couple months. People that moved during the pandemic and thought that they were not going to have to come back into the office, and that now has changed. So we have definitely had folks moving back because they have to get closer to work. They're no longer being allowed to work remotely full time. So, you know, if you moved to Idaho or Montana and you had a job here, you know, we're getting some people that are having to come back from that. But areas out of here, though, it's like, I feel like people are going all over the place. You know, it's the retirees that are getting out of here. A lot of people, it's like East Coast or close in. So, and that would be like Eastern Washington, Idaho, Montana. A lot of folks moving in that direction. It's still like, you know, everything evolves and changes. So we're going to have certain times where people are leaving than are coming, and other times where it's flip-flopped, and everybody's going to go all over the place. I think that the amazing part about the country that we live in is that you can get really anywhere you want to go. You know, yes, you got to get on a plane. It's not great, but you can absolutely make it happen. So it's opened up like all of these different areas for people to go explore. So I hope that over time, maybe some of the places that don't have as many people traveling to them, there's more people moving to maybe more unique locations, spreading it out, but also making it more interesting. So, but there's absolutely people still coming in and going.
Yeah. Janet, what are you seeing in your office? Are you seeing out of state buyers still?
Absolutely. A lot of relocation, and for military reasons as well. We here in the Tacoma University Place area have a lot of people coming in to JBLM, the base. So we're definitely seeing a lot of people relocating, as John already mentioned, now going back to the office, right? People are looking to move. They might have thought that they could be a little bit further away, and now they want to get closer to the office. So it's definitely, relocation is a huge thing we're seeing.
Cool. All right. Well, in our final minutes, is there any last thoughts either one of you have, or any topic that we didn't cover that you'd like to hit on?
I think I just hope that one of the key takeaways for people watching is, get informed, talk to your realtor, talk to your mortgage professional, find out all the information, right? Even if you think that you're not in a position to buy today, still talk to us, because we might be able to put a plan in place for you so that we can get you ready, right? The best time to do this isn't when you're 30 to 60 days away from your lease ending. You want to have all the information in advance. That way, you know where you're headed.
Yes, I would agree. That's number one, because I feel like all of us have real estate apps on your phone, and everybody loves looking at real estate. It's one of those things. So the challenge will be is that if you're not, you will find something when you're not ready, and it might be the one, but you haven't done what's necessary behind the scenes to actually pull the trigger. So what ends up happening is that you shop, even though you maybe shouldn't be shopping. You find the dream house that now becomes the comparison house that you weren't able to take a swing at, that might not ever come back again. So get prepared early, and then start looking. And even if it's just for fun, right? When you're looking just for fun, but you can, then if that opportunity does strike, it's just so much easier to make that decision and so much less stressful. It's already such a big change, new chapter. And when you're going into that with you're inside, you're scared, you're nervous, you're excited, all those things. But then also when you don't have a mortgage dialed in, then it makes it just magnifies all of that. So for sure, behind the scenes. And then the one thing for the sellers is that I have so many clients that I go in and they do all this work to get their house looking sharp, all the things that they put off when they live there. And it doesn't necessarily have to be really expensive, but it's like, painting inside, getting the outside just really dialed in, get your yard looking nice, or, doing this one little upgrade here or there. And there's so many times that we'll get pictures and we'll send them to the client, and they'll be looking at marketing materials. And they're like, man, this place looks amazing. I wish we would have done this 3 years ago when we started talking about it. So do the things now that you really want, as long as you can afford it. Do them now. Don't wait, so that you can get the opportunity to spend the time in your house with all the things that you really wanted to do. And then when it does come time to sell, you don't have to do all that work then either. So we push off a lot of things. Life goes fast incredibly fast. But put a little love into where you're at and enjoy it. You got to spend a lot of time there. So don't wait to do those small projects that you continually push off.
That's right. Boy, I can attest to that. We've added a deck and remodeled our bathrooms at our house. It's like the best things we ever did. I spend more time on the deck now than I do inside my house. So that's, can't wait to do the kitchen, but that'll be a whole other
in time.
Well, anyway, we're just about out of time, and I want to thank our panelists for joining us today, and thank you for watching and following along. And just to add, our ability to keep you informed about the area's real estate market depends on your support. And if you like this event, please consider supporting local journalism by subscribing at thenewstribune.com. Thank you so much.